زكاتك تدفع عنك البلاء وتحفظ مالك أن أقام.
الحمد لله والصلاة والسلام على عباده الذين اصطفى. Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome to part 8 of the short series on contemporary laws related to zakat. We continue with the calculation of zakat on assets, and today we will be looking specifically at the different types of retirement savings and the zakat implications on retirement savings. Now, when we look at the retirement savings world, we need to understand that sometimes these are country specific. So different sets of legislation in different parts of the world may differ, but we'll try to go through some of the principles here and of course look at it from a South African context, but this can be applied to other jurisdictions. Now, retirement savings vehicles are generally of two types. They are either compulsory, that is, it's a term of employment, and you have to be a part of that retirement savings fund, or you have voluntary retirement savings. Now, the zakat implications differ based on whether you have a compulsory retirement saving or you have a voluntary retirement saving. If you have compulsory contributions that are deducted at source by your employer, and it's a condition of employment that you have to be a part of that particular pension fund or retirement savings vehicle, then that amount that has been saved for your benefit is not zakatable. It's been deducted at source, you do not have access to it, and it would not be zakatable. However, if you have voluntary contributions, so sometimes your employer may have a retirement savings option, but you can voluntarily contribute to it. It's not a compulsory investment vehicle. Or sometimes you might be employed, but you are going to be privately investing in a retirement annuity. This is done privately by yourself, and it's, of course, a voluntary contribution. So the principle here is that where it's done voluntarily, then the full value of that fund is zakatable. So that would be a zakatable case. And if it's a compulsory contribution, then it would not be zakatable. Now, how would you calculate the zakat on this? You would look at the market value on your zakat date, or a date that is very close to that, or as close as possible, and the market value of your investment would be subject to 2.5% of zakat. Now, something important that one needs to be aware of, and this is particularly in South Africa, is that when you move from one employer to another, at that point, you have the option of withdrawing the amount that has been saved in your retirement fund. Now, there may be tax consequences of you withdrawing it and penalties, but you do have access to those funds, or you could move it into what is called a preservation fund. So you don't get taxed, but you now move it across and you do have access to it. When that happens, you are now liable for zakat on whatever is sitting in that preservation fund, even if you do not choose to take it in your personal capacity or to withdraw your benefit from that fund. So this is important to note, that if you are moving from one employer to the other and you are keeping your retirement savings that's sitting in a pension fund, you are keeping it in a preservation fund, now it becomes fully zakatable because you had the option of accessing it when you moved from one employer to the other, irrespective of the fact that there will be tax consequences and penalties if you had to withdraw from the fund at that point in time, similar to a voluntary retirement contribution, where if you had to exit the fund or withdraw from the fund, you would have certain tax consequences. You might also have a situation where there are your contributions and company contributions. Again, one would need to look at whether it's compulsory or whether it's a voluntary fund. If it's a compulsory fund, it would not be zakatable. If it's voluntary contributions, both from yourself and from the company, then it would be zakatable. Now, when it comes to the payment or discharging the amount of zakat, there is a leeway for you to defer the payment for each year to the point when you actually withdraw from the fund and have access to the capital. It's always best to pay it annually. So, for example, in year one, you have a value of a fund that's R1,000,000. 2.5% of that, the zakat liability is going to be 25,000 rands. Ideally, you should pay that immediately. But as the value of these funds sometimes becomes quite large, the zakat payment may also become quite burdensome. So there is leeway from a fiqh perspective for you to record the 25,000 rand for this year. Assume in the following year it's 30,000 rand. You now have a cumulative liability of 55,000 rand, and you continue to keep that record. And when you ultimately retire and withdraw from the fund, and let's assume you have a lump sum of 10 million rand that is received, you also have accumulated perhaps a 200,000 rand zakat liability. You will then discharge that zakat liability at that point in time when you receive the funds. So there is leeway for you to look at that, but of course you would need to keep a record of that, particularly if you have to pass away somewhere during this time. It's important for your heirs to know that you do have zakat that is outstanding. So this brings us to the end of this session, in which we looked at zakat on retirement savings. And the most important principle here is to look at whether it's a compulsory fund, compulsory term of employment, or whether it is a voluntary contribution fund, and the zakat implications would differ based on that. Subhanallah wa bihamdihi, subhanakallahumma wa bihamdika, nashhadu an la ilaha illa anta nastaghfiruka wa natubu ilayk.
لذلك قال الرسول الكريم فلد بالنداء تفز بالمرام.